If you can control the commodity markets through derivatives, you really can control all prices in the world. You're controlling all capital, labor, goods and services values in the world, and I think that's what has been happening. But this is just another part of the long-time struggle, the eternal struggle between the financial class and the productive class. Unfortunately for the financial class, the productive class is usually too stupid to see what's going on.
All right. What do you get when you combine SD bullion and the New Zealand Mint? You get the lowest price silver coin ever released to the world. Introducing the Roaring Lion, a 1 ounce, 4 nines fine silver coin with micro engraving security that retails for lower than some of our competitors sell silver bullion rounds for. Check out this magnificent beast, the Roaring Lion silver coin, at sdbullion.com/roaring. That's sdbullion.com/roaring.
Hey everyone, this is James Anderson. I'm filling in this week for both Elijah Johnson and Eric Dubin for SilverDoctors.com. This is your SD Metals and Markets Wrap. Our guest today is the director of the Gold Antitrust Action Committee, Chris Powell. And you can bookmark and follow Chris and GATA's work at GATA.org. Hey Chris, thanks so much for joining me today.
Oh, my pleasure.
Chris, I was looking back at some of your interviews in the last few years, and when I found something you said in August of 2016. You described anti-gold price market intervention as people who are against it as being a guerrilla revolutionary movement, but guerrilla revolutionary movements sometimes win. I guess to begin, what is the assertion of GATA first, and then how's the worldwide movement doing in early 2018?
Well, we began back in 1999 to expose and oppose the manipulation of the gold market. We took a while for us to discover that this was not just a ordinary antitrust conspiracy by major international banks, that the governments and central banks were behind it, that it was a long-standing government policy in the West to suppress the gold price. It's been formally United States government policy for decades. It took us a little while to discover that. We've researched the policy. We've developed evidence of the mechanisms of the gold price suppression scheme. We try to expose and publicize what's going on and why it is going on. And sometimes we have a little success, and many times we don't, because the international financial mainstream news organizations really come close to prohibiting discussion of the subject.
Yeah, I mean, over the years, which surprised you more? Number one, is it the lack of real financial journalism that, the people who truly should be questioning central bank policies, or maybe is it the lack of support from the floundering precious metals mining community, or is it maybe something else?
Well, we understand why the monetary metals mining industry does not want to get into the issue. Mining is the business that's really most vulnerable to government. I mean, government controls mining permits and environmental regulation enforcement. It doesn't want trouble from the mining industry on financial matters. The mining industry is also the most capital-intensive industry in the world. It takes typically billions of dollars to get a mine started, and since that much money is needed, the mining industry is dependent on the investment houses that are formerly the agents of central banks. In the United States, they're all primary dealers in U.S. government securities. So any monetary metals mining company that wants to complain about price suppression by the government and its agents and the investment banks is risking cutting its own throat. So I understand why the mining companies don't want to get into this issue. The financial press is something else. They are not really directly controlled by by governments, and their job is to keep an eye on governments, to hold governments to account. Now, of course, there's financial powers that are very influential with the financial press, and I suppose that is a factor here. But I'm much more surprised with the failure of financial news organizations to put critical questions to central banks than I am with the cowardice of the mining industry.
Yeah, and we've both likely seen the 2009 WikiLeaks cable, where China basically acknowledges that the U.S. and Europe have always suppressed the price of gold. It seems like when you go in the Eastern world, you actually get financial journalists to speak and interview you. I mean, I've seen you on CNBC Asia in Singapore and on CNBC in India. I mean, what's the difference between there and maybe financial journalism here in the West?
Well, the Asian countries are more interested in gold than the Western countries are. Secondly, the Asian countries led by China and Russia are very aware of the gold price suppression scheme. They're very aware of the oppression that the dollar brings to the world financial system, and they are, I think, slowly, gradually working against it. So that the issue can be discussed over there. We know from the WikiLeaks cables that you mentioned that reports about gold price suppression by Western governments, and particularly by the United States, are often published in the government-controlled press in China. We know that the U.S. government knows about these reports in China because the WikiLeaks cable showed that the U.S. Embassy in Beijing translated a bunch of these Chinese news reports and cabled them back to the State Department in Washington. So, we know from the WikiLeaks cables that China knows all about gold price suppression by Western central banks, and we know that the United States knows that China knows because of the cables that were sent back from Beijing to the State Department. I'm morally certain that China right now is more or less cooperating with the gold price suppression scheme. I think China wants a little more time to obtain gold at sharply discounted prices, and has been playing along with the scheme at least since the gold price smash of April 2013. How much longer this will go on, I don't know, but I do know that at least sometimes gold price suppression is permitted to be discussed officially and in the financial news media in China, in Asia, much less so in the West.
Yeah, I mean, that reminds me of when Timmy Geithner went over there in 2009 and got laughed at by those students. It almost seems like that's kind of when the tacit agreement was made to let China start to allocate some gold bullion and to differentiate and get out of perhaps some of their treasury exposure. And since 2011, it looks like they've just been flat as far as U.S. treasury purchases.
Yeah, China is walking a tightrope here. They've not very smartly accumulated so much in U.S. government debt instruments, and now I think are realizing that the dollar inevitably is going to have to be devalued, and here they're stuck with all these dollars and U.S. Treasury instruments. They can't want to explode the gold market and smash the Treasury market all at once. They'd destroy their own foreign exchange reserves. So I think they're doing this balancing act. They're trying to unload their foreign exchange reserves in dollars on a very gradual basis, and they're trying to increase their gold reserves on a very gradual basis in a way that doesn't blow up either market.
Now, I'm not sure if you're aware or not, if you saw it. I was looking at your website, and I know that Ed Steer covered it, and that's exactly how I found it. It was published on January 8th, 2018 on a website called EnglishRussia.com. Basically, it was a publication of over 20 images documenting some of the over 1,800 tons of gold Russia has accumulated, most of it over the last decade. Their official gold accounts for over 5% of their annual GDP, which is the highest gold to GDP in the world. It's also about 4.5 times the amount of gold they held since the 2005 GATA Gold Rush 21 conference. Did you happen to see these images by chance?
Yes, yeah, I did, and acquisition of gold by Russia is a long story. The deputy chairman of the Russian central bank, Oleg Mizeyskov, gave a speech to the London Bullion Market Association meeting in Moscow back in, it was 2004, 2005. The only words in English he spoke were Gold Antitrust Action Committee, which was pretty remarkable because back in those days, as far as GATA knew, we'd never had any contact with anybody in Russia. But the Mizeyskov speech showed that the Russian central bank was watching our work very carefully. I would not be surprised if GATA's work induced the Bank of Russia to remove its gold from deposit with the Bank of England, where it was being leased, and to start acquiring gold to liberate Russia from Western control in the currency markets. The Russians, the Chinese, most major central banks know that if they are going to use the U.S. dollar as the currency of world commerce and the world reserve currency, they are always going to be under the control of the U.S. government to a large extent, and that they can obtain their independence only by resorting to another world reserve currency, and the only neutral world reserve currency is gold.
Yeah, I mean, if you just compare and contrast that to, for instance, like Steve Mnuchin when he went over to Fort Knox and that ridiculous PR stunt in August of 2017, when that past solar eclipse happened. I mean, I guess just from the documents and the accounts I've read, it looks like he went into one of 13 chambers in the Fort Knox gold facility, expected a couple bars here or there, and then just tweeted the gold is safe. And then I look and see what type of coverage it got. And the New York Times the following day, the only thing they had to cover was Steve Mnuchin's wife, who got in trouble for arguing with someone on an Instagram account over the baubles she was wearing. It wasn't about anything about the gold or any type of accounting that was going on there. It was just simply just a fiasco that had nothing really to do with the gold, it seemed. I wonder what your thoughts are.
Yeah, I don't know what that little episode was about, other than perhaps to call attention to the gold reserves the United States claims to have. Queen Elizabeth, I guess a year or two ago, paid a very well publicized visit to the Bank of England's gold vault. I think that might have been arranged to build confidence in the Western gold banking system as well. But the real issue with the U.S. gold reserves is not, I think, whether there's gold in Fort Knox. There very well may be gold in Fort Knox. The real question about it is who owns it? How many claims are there to the U.S. gold reserve? We know from a letter we have from a member of the Federal Reserve's Board of Governors, that the Federal Reserve has gold swap arrangements with foreign banks that it refuses to make public. We know that the Bank for International Settlements is involved in gold swaps. In fact, has really exploded its gold swap business over the last year. So the real question with these Western Central Bank gold reserves is not so much whether they have any gold, but just how many claims there are to the same bar of gold. I think that's the most classified information. The Western Central Bank gold reserves are almost certainly very much oversubscribed by gold swaps and gold leases. We have the secret staff report of the International Monetary Fund from March 1999, which confirms that Western central banks conceal their gold swaps and leases so that they can facilitate their secret interventions in the gold and currency markets. So this Western central bank gold is not necessarily all in the vault, and it's not necessarily even in the possession of central banks. It has been hypothecated and rehypothecated, and it's oversubscribed. And even if there's 8,000 tons of gold at Fort Knox, the real question would be, how much of that gold has been leased out, how much has been swapped, what impairments are against that gold, and that's the real question we want answered if there was any audit of the United States gold reserve.
Right. Yeah, I mean, I guess the rhyme in history is kind of interesting because when you look at the last time Western central banks got together and were doing, hardcore suppressing of the gold price, and we're talking about the London gold pool, and that failed, obviously, and that was, I mean, if you look at the amount of gold that the United States had, like in the early 50s, there was over 20,000 tons, and by the end of it, they were down to 8,000. So essentially, they had given away almost all the gold they had confiscated from 1933 to push and suppress the price and try and hold it around 35 to 42 bucks. So, I mean, is that essentially what we're dealing with now in just a more, complex way?
Yeah, I'm sure that the Bank for International Settlements is functioning essentially as the continuation of the London gold pool, redistributing Western central bank gold reserves around to various markets where the price most needs to be tamped down to preserve currency values. This used to be done openly through the Bank of England and London. Now it's done secretly through the BIS in Basel, Switzerland.
And I mean, this almost seems like a battle between producers of things versus the battle of the capital, right? I mean, it's essentially, do you think that the ongoing gold price suppression has contributed overall in the growing inequality of wealth here in the United States and around the world? I mean, I would presume that you would agree, correct?
Oh, of course. This is, just another chapter in the long-standing struggle between the productive classes and the financial classes. This is part of a much bigger scheme to suppress all commodity prices. The British economist Peter Warburton wrote a seminal essay about this in 2001. I think he titled it "The Debasement of World Currency is Inflation, but Not as We Know It." He speculated that it would only take central banks a few $1 billion to control all commodity markets through derivatives, and that, I think, is what's happening. Commodity prices generally are suppressed through the futures markets, and the financial powers profit from this because they control the issuance of currency and they can direct where it goes, and they try to keep it from going into prices of goods and services that get measured in consumer price indexes. If you can control the commodity markets through derivatives, you really can control all prices in the world. You're controlling all capital, labor, goods and services values in the world, and I think that's what has been happening. But this is just another part of the long-time struggle, the eternal struggle between the financial class and the productive class. And fortunately for the financial class, the productive class is usually too stupid to see what's going on.
Yeah, I mean, they've obviously been kicking butt since 1971, really. I mean, when you look at the wealth inequality data, I mean, the last time, we're well beyond where we were in 1929, and it really looks like that really got going after the final ties to gold and the dollar and the financialization of the economy, it looks like.
Yeah, well, this goes back even farther. I would encourage everybody to read William Jennings Bryan's speech to the Democratic National Convention in Chicago in 1896, the famous Cross of Gold speech, where he described it in detail, that this was a struggle between the banks on one hand and the miners and the farmers and the factory workers on another.
Mm-hmm. Now, of course, they always typically end up badly. Is there any historic example of dissipating empire like that doesn't run a price management scheme to maintain their status quo? I mean, I'm trying to think through history if there's ever been that, or is this just simply kind of history repeating in general?
Well, the London gold pool blew up in the spring of 1968. The Western powers simply were running out of gold, and they saw that if the pool continued for more than another few months, they'd lose all their gold reserves. And one day there was no more London gold pool, there was no more London gold market, and the price was liberated for a while until after a few years, the Western central banks got back together and decided they could control the gold price through the futures markets, through derivatives. And a futures market was created in the United States in 1974, and the price was again, held down much lower than it would be if there had been a free, unmanipulated market. But I make no predictions as to whether this is going to end or how it's going to end. The gold bugs tend to think they're rooting for China and Russia, and that China and Russia are going to pull the plug on the commodity price suppression scheme, and maybe they will, but if they do, they won't do it because they want free markets generally, and liberty and democracy and transparency to break out all over the world. They'll be doing it because they see it in the interest of their own countries, and eventually they will be trying to control markets themselves. I think the only liberation we can look forward to here is the liberation that comes from people becoming aware generally around the world of what's going on here. That's a pretty big struggle to achieve that, and we're doing what we can, but we're a very small group.
Now, you mentioned 1974. I stumbled upon that WikiLeaks cable. I guess it was January 1st of last year, and tweeted it out, and then TF Metals Report picked it up. And it was about, it looks like a meeting that happened in London in 1974. It was basically setting up the futures exchange and discussion amongst various London gold dealers as to, how best to set that exchange up in order to dissuade hoarding of gold.
Yeah, it was a cable from the U.S. Embassy in London to the State Department describing the conversations that U.S. diplomats in London had been having with London bullion bankers. And the cable says that the London bullion bankers assured the U.S. diplomats that if a futures exchange in gold a futures market in gold was established in the United States, they would engender so much volatility in the gold price through paper trading that they would drive ordinary investors out of the gold market. And, I think that's exactly what happened. It suggests very powerfully that the purpose of creation of the gold futures market in the United States was indeed price suppression and to scare ordinary investors out of gold by injecting an enormous amount of volatility in the market.
Mm-hmm. And obviously they lost control toward the end of 1970s when the price skyrocketed up to $850 the same day that silver was hitting roughly $50. Supposedly the rules were changed on the silver side. I guess you couldn't go long on the silver side for a temporary time frame, and it sounds like some of the Hunt brothers were over leveraged in the derivatives themselves, and they had to get bailed out for roughly $1 billion, I believe it was, a consortium of banks. So, I mean, it's interesting to see just history. I don't think people realize that it wasn't just simply silver and gold that were reaching record prices. Obviously, oil prices had probably tripled or quadrupled by that time. You had a few months later, platinum and palladium both hitting record highs as well. So it wasn't just simply the two monetary metals. There was other commodities that were breaking out, obviously. And the only way to tamp that down was to drive up interest rates over 20%. And Volcker obviously won that war in the short term. But right now you couldn't pull that off without bankrupting and blowing up the economy, I assume, right? I mean, it's...
Yeah, that's not likely possible these days. But, now that governments have control of the futures markets and governments can create infinite amounts of money and electronic money and apply them to the futures markets, they can control all futures prices, at least until there are shortages turning up in the the economy. They don't want shortages. What they want is to keep the commodity prices under control. And if there's a futures market in the commodity, and the government intervenes in that market, the price can be kept under control. The filings made by CME Group, which operates all the major futures exchanges in the United States, these filings with the U.S. Commodity Futures Trading Commission and the Securities and Exchange Commission show that CME Group has been offering volume trading discounts to governments and central banks for their secret trading of all futures contracts in the United States. It's a, official government filing that governments and central banks are secretly trading the futures markets in the United States. I think it's remarkable. I've never seen it reported in a mainstream financial news organization, and I've sent the documents probably to most major financial news organizations in the West, trying to get them to inquire about this secret trading by governments and central banks in the futures markets, but they won't do it.
Yeah, and I just saw Grant Williams writing. He writes a newsletter called Things That Make You Go and I guess he had found through the OMFIF that they had admitted that central banks, in the numbers of 30 to 40 central banks, I think, are now actively trading equity markets. So essentially, you have central banks who are running around the world acting like hedge funds now.
Yeah, but the equity market trading is generally known. It's not emphasized, but it does turn up acknowledged in the financial press from time to time. But the secret trading in the futures markets, as far as I can tell, has never been reported.
Mm-hmm. And then this past summer, you had Terry Duffy talking on Fox Business. He's the CME Group chairman and CEO. He was discussing, just hypotheticals of where the gold price should be. He had mentioned prices of $5,000 just based on news and events, etc. And here we're sitting at, when he said it was $1,220 gold roughly. And so I found that kind of interesting. I'm sure you did at GATA as well.
Well, somebody should have asked them, are central banks and governments trading futures in your exchanges markets, but nobody did.
You're right. Well, Chris, I want to thank you for coming on this week. You've probably forgotten more about gold price manipulation and such than I could ever come and find. I mean, it's amazing how much you remember right on the moment and are able to recite, and just in a short time frame. It's amazing the amount of evidence that you guys have compiled over there, and I just want to thank you for doing that and for joining us this week.
No, my pleasure. Thanks so much for your interest.
Yeah, and I just wanted to put a plug in there for you guys. I see both your GATA colleagues, Bill Murphy and Ed Steer. They're going to be over at the Vancouver Resource Investment Conference this coming Sunday and Monday. Anyone out there?
Yes.
Anyone out there who's going to be in the Vancouver conference, be sure to go to GATA's reception from 5 to 7 p.m. Monday at the Lions Pub at 888 West Cordova Street, just around the corner from the conference hall. And that's it. I guess, Chris, before we go, are there any final thoughts you may have, or anywhere where people can find your work, I suppose?
Oh, sure. GATA's internet site is gata.org. We do daily email dispatches. You can sign up there if you want to get on our email list. We're a 501c3 civil rights and educational nonprofit organization recognized as tax exempt by the Internal Revenue Service in the United States. So if U.S. taxpayers want to make contributions to help keep us going, they're federally tax deductible. We welcome support from individuals, because we don't get much from the mining companies, that's for sure.
As you discussed and as you mentioned, I get it. Well, Chris, thanks so much for being on this week, and we look forward to talking to you again in the future.
Oh, I look forward to it too. Thanks very much.